Everybody, today is Wednesday, the 6th of March, 2024, and the market had a little bit of a gain here today, getting back most of yesterday's loss. We're still in a primary uptrend above the rising 20-day moving average, above that trend line as well. As we know, we're quite stretched here, and when the market breaks below the 5-day moving average, I always get cautious, and I do not simply rush in and buy the dip. Instead, I want to wait for strength after the dip to be a buyer. And some days you get a gap up like this, and that takes away most of the upside like it did today. And you miss out on an opportunity. Well, guess what? Anyone who doesn't miss out on an opportunity from time to time is definitely not a real trader. They're just somebody trying to sell you something. The S&P 500, this is possibly a lower high. We don't know yet. But I know this. We have a quite extended market. And when we start to slow down a little bit, it tells me just be cautious. This is the month to date volume weighted average price. We're right at it. We're right at the 5-day moving average. Tomorrow, we get rid of this data and the 5-day moving average calculation. So even if we were to be flat, that 5-day moving average would continue to rise. The only way that 5-day moving average is going to decline like this is if we see a larger sell-off, something to the effect of, down towards this level. If we did that, got a bounce, and then we're trapped below the 5-day moving average, then perhaps it would be prudent to be a little bit more cautious. I have been saying that, we've had a lot of speculative fervor in the market with a lot of little companies really rapidly rising, and the lack of long setups, although we had a great long in Lyft today. This was our only long setup as a swing trade today. We got involved, and it's looking like it has more room to run. So that's the good news is regardless of what the overall market condition is, I'm always going to take each stock based on its own merits. At the end of the day, I'm really a stock picker. I like to have a healthy environment, and I like to know when it's time to be a little bit more cautious. And the NASDAQ is also telling us, let's just be a little bit more cautious. Certainly not bearish. We have a rising 20, 50, 200-day moving average, etc. I don't get bearish when we're in an uptrend. That's just foolish. I get cautious when we break below the 5-day moving average. We closed below it again today, but you can see it's still rising. Today, in the 5-day moving average calculation, we replaced this day with the data from today. So, of course, that has a slope of rising to it. Now, by the end of the day tomorrow, when we get rid of this data, it's possible the 5-day moving average will be declining. Let's say we start out like this in the morning and then start to do something like this. Well, at the end of the day, the 5-day moving average will look like this and have a slight slope lower. It doesn't mean just because we're below a 5-day moving average, it's going to completely fall apart, but it definitely tells us we have to be aware of if it then goes down and takes out a level of support, then perhaps it's going to be seeing a deeper pullback. If it breaks that 20-day moving average, maybe it comes down to this trend line or the year-to-date anchor along with the 50-day moving average, which both flow together in here. Today was day 45 the market was open. So, of course, that volume weighted average price is going to be close to the 50-day moving average. And if you look at this, could this be a shoulder, this a head and a shoulder? We don't know yet. It's just a lower high for now. What we need is a lower low to confirm that it's breaking down on the intermediate term time frame. But even if that were to happen, we still have a primary trend higher, so I wouldn't get aggressive on the short side. What we're looking for is trend alignment and to get long when the trends are aligned in a bull market like we're in. The Russell 2000, I've completely avoided this one and it doesn't bother me one bit. I just don't see a low risk setup in here. It's certainly been more bullish than it has been in a while, and that's great if you're long. It sure looks to me like it's going to be heading up towards this 215-ish level. The question is not if it's going to get there, because I think it's likely it will, and I would change my mind quickly if we were to break down, but how it gets there is more relevant. If we break down below here and create a lower low, I would tell swing traders to get out because this might happen. So it all comes down to what time frame you're looking at. Everything I talk about is from a swing trader's perspective. And when we have a choppy market environment, I'm simply going to avoid the Russell 2000. There's so many other things that you can trade. The semiconductors just are completely fathom, what am I trying to say? Unsinkable. They are really the strongest group we've seen in quite a while in this market. And it's what keeps this market higher, in my opinion. The semiconductors, we had a little bit of a breakdown yesterday, but we had what? Well, we had a higher low. Today we had a higher high. We're still in an intermediate term uptrend with a rising 5-day moving average. And of course, the longer term time frame is higher as well. It's the buyer's game to lose. It doesn't mean just rush in there and buy every dip. It means buy smart and know where your stop is in case it reverses. The higher it goes, the more likely when it pulls back, it's going to be a deeper one. Biotechs are still consolidating within this range here. As we know on the weekly time frame, it looks like it's probably heading for 110, maybe then slow down and head up towards 120. These are very bullish looking weekly time frames here. And the daily time frame, I'm still hoping that we do break down from here. Now we've got a declining 5-day moving average. We're below the month to date. That's that pink anchor. So I'd love to see a pullback down towards this level. We're still pretty far away from that 20-day moving average. If we can pull back down, break down from here and then reset up in the coming weeks, that's what really would get me more bullish about buying the biotechs here. For now, we have a pullback and it's more correcting through time. However, we have to be aware that the support is being tested more frequently. The more frequently any level of support is tested, the more likely it is to fail. We do have lower highs in here as well. So maybe we're going to break down, or if we get back above here, I think the buyers are going to make another push at this market higher, and you could get involved with a stop underneath basically today's low. So be prepared for anything. The preferred scenario is a pullback first, but we have a lot of strength in this group. And tomorrow, as we get rid of this data, the 5-day moving average will be advancing if this market is flat to higher. So you've got to keep an eye on it. And it's not just about where it is, but where it has the potential to go and anticipate the action. The energy names continue to be the stronger group. And as they've broken beyond that anchor from last year's high, as we know, the weekly time frame, it's still kind of in this bigger range, but perhaps this is the beginning of a move back up towards the high end of that range. That's certainly possible. I don't trade these names because they're just too damn choppy, but we do see we had this low, we have a higher low, and if we make another higher high, then this will become the higher low to set your stop against.